Hello everyone, welcome to the Stock Minds web channel. Zeta Global, NYSE Zeta, has delivered another standout financial performance in Q2 2025, showing strong growth in revenue, improving earnings trends, and robust cash generation. Despite recent share price weakness, the combination of its accelerating fundamentals and favorable valuation metrics makes Zeta Global an intriguing opportunity for investor attention in the AI-driven marketing space. In this video, we will dive into Zeta Global recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About Zeta Global. Founded in 2007 by David A. Steinberg and John Scully, Zeta Global is a public marketing technology company headquartered in New York City. It went public via IPO in June 2021. Zeta offers the Zeta Marketing Platform, ZMP, a comprehensive AI-powered marketing cloud that unifies identity, intelligence, and omni-channel activation across email, social, mobile, CTV, and social media. Built atop one of the industry's largest proprietary databases, the platform empowers over 450 enterprise-scaled customers to personalize campaigns using rich consumer data and advanced analytics. Zeta Financial Performance. Zeta Global delivered an impressive financial performance in the second quarter of 2025, showing strong top-line growth and improving profitability trends. The company reported revenue of $308.44 million, a 35.38% increase compared to $227.84 million in Q2 2024, marking another solid quarter of accelerating growth. On the bottom line, Zeta significantly narrowed its losses, posting an EPS of -6 versus -16 in the same period last year, representing a 62.5% improvement year over year. On a trailing 12 months TTM basis, revenue climbed to $1.15 billion, up 40.6% from $822.09 million in Q2 2024, while EPS TTM improved to -18 compared to -87 previously, a remarkable 79.31% improvement. Additionally, the company's free cash flow per share, TTM, reached 66 cents, rising 34.69% from 49 cents a year ago, demonstrating Zeta's increasing ability to generate positive cash flows despite GAAP losses. From a profitability perspective, Zeta reported a gross profit margin of 60.89%, a net profit margin of -3.16%, and a free cash flow margin of 11.83%, reflecting healthy operational efficiency alongside disciplined expense management. In terms of returns, return on assets stood at -1.14%, while return on equity was -8.21%. The company maintains a solid debt-to-equity ratio of 0.31, suggesting a healthy balance sheet and manageable leverage levels. Over the past 5 years, Zeta's revenue has been growing at a 29% CAGR, free cash flow at 36.9%, while net income remains negative but is projected to turn positive this year. Zeta has been growing rapidly in the past, and this rapid growth is still projected to continue. Zeta Fiscal 2025 Financial Forecast. Looking ahead, analysts remain optimistic about Zeta's growth prospects, forecasting 2025 revenue of $1.26 billion, a projected 25.49% increase from $1.01 billion in 2024. Non-GAAP EPS for 2025 is estimated at 66 cents, up 1.07% from 65 cents in 2024. Reflecting this positive outlook, Wall Street analysts have assigned a buy rating on Zeta stock with a consensus price target of $26.67, representing a potential upside of 40.29%, while the highest target price reaches as high as $44, implying a potential upside of 131.4% from current levels. Zeta stock price performance and valuation. At the time this video was created, the stock was trading at $19.01 per share, reflecting a -21.5% decline over the past year, significantly underperforming the S&P 500, which gained 14.3% in the same period. However, taking a longer-term perspective, the stock has delivered impressive returns since its IPO in June 2021, surging 129.8% and outperforming the S&P 500's 50.8% gain over the same timeframe. From a valuation standpoint, Zeta's current price-to-sales (PS) ratio stands at 3.52 on a trailing 12-month basis, with a forward PS ratio of 3.72. On the earnings front, the company trades at a non-GAAP price-to-earnings (PE) ratio of 30.02 TTM, with a forward PE of 29.99. Additionally, Zeta's price-to-free cash flow (PFCF) ratio is 33.11, a reasonable valuation given the company's strong free cash flow growth and positive cash generation despite the GAAP losses. Based on Fiscal.ai data, if we look at the valuation since 2022, the forward PS is slightly above the average, while the forward PE and PFCF are below the average. This indicates potential undervaluation as Zeta's financial performance is still projected to grow rapidly in the future. Zeta growth potential. Zeta growth prospect remains strong, driven by several factors. 1. AI-driven platform innovation and market leadership. Zeta Global is a pioneer in AI-powered marketing technology, with its advanced Zeta marketing platform ZMP delivering significant differentiation from traditional solutions. Utilizing AI, ZMP processes trillions of consumer signals to create hyper-personalized customer experiences across multiple channels. The introduction of Zeta Answers, a prescriptive AI framework, has boosted customer engagement and ROI, driving clients' consumption revenue growth by over 40% year-over-year, well above the company's overall growth rate. The platform combines identity resolution, intelligence, and omni-channel activation into one solution, solving marketers' challenges with fragmented data. As the global AI marketing market is expected to grow from $20.44 billion in 2024 to $82.23 billion by 2030 at a 25% CAGR, Zeta's early leadership offers a strong competitive edge. Its AI Agent Studio further strengthens this by enabling automated, personalized customer journeys without third-party cookies in the evolving digital ad landscape. 2. Robust customer growth and expanding market penetration. Zeta Global's customer metrics reveal strong market traction, with a 21% year-over-year increase to 567 scaled customers and an 11% rise in quarterly RPU to $532,000. Its client base includes 44% of Fortune 100 companies, 11 of the 17 largest consumer and retail firms, and 5 of the 10 largest insurance companies worldwide. Super-scaled customers whose spending over $1 million annually grew 13% year-over-year to 148, with a quarterly ARPU of $1.73 million, up 31%. The direct platform revenue mix improved to 75% from 67%, boosting margins and lessening third-party reliance. The One Zeta initiative aims to cross-sell multiple use cases, with under 20% of customers currently using more than one, suggesting significant growth potential within the base. The net revenue retention rate stands at 114%, reflecting strong satisfaction. The agency segment is thriving, with independent agencies doubling in 2025 and large agencies growing 40%. 3. Strategic market position and long-term growth framework. Zeta Global's long-term growth strategy, outlined in its Zeta 2028 plan, targets revenue of $2.1 billion with a 20% organic CAGR, adjusted EBITDA of $525 million at a 25% margin, and free cash flow of $340 million with a 16% margin and 65% conversion. This is supported by 14 consecutive quarters of over 20% revenue growth and operational improvements. Operating in a large $83 billion US total addressable market, growing 12 to 14% annually, Zeta also has promising international opportunities. Industry recognition. including leadership in the latest Forrester Wave with top scores in 13 of 22 categories, affirms its strong position. With a unique data asset of over 2 billion consumer profiles and 1.5 billion identities, Zeta creates barriers to entry and enables superior targeting. Its focus on integrating the fragmented MarTech stack against growing demand for AI solutions supports sustained market share gains amid sector consolidation. Risks to consider. While Zeta stock looks like a compelling investment opportunity, we should be mindful of potential risks. 1. Hypercompetition. Zeta Global contends with intense competition from leading tech giants like Adobe, Salesforce, Oracle, Google, and Microsoft, all of which have strong footholds in the marketing cloud and advertising technology sectors. This fierce rivalry continuously challenges Zeta to protect its market share and drive innovation, as these established companies aggressively advance their offerings. The competitive landscape demands Zeta to consistently evolve and differentiate itself to maintain relevance and growth in the market. 2. Regulatory and data privacy scrutiny. Zeta Global faces ongoing compliance risks due to evolving data privacy laws and increased regulatory scrutiny, which may result in higher costs and operational difficulties. Managing vast amounts of personal data exposes the company to significant cybersecurity threats and potential data breaches. Such events could severely damage Zeta's reputation and undermine customer trust. To mitigate these risks, the company must implement strong security measures and stay compliant with changing regulations. 3. Macroeconomic and market risks. Macroeconomic factors such as rising inflation, increased interest rates, and geopolitical uncertainties, including U.S. tariffs on IT hardware, pose significant risks to Zeta Global. These conditions could lead clients to reduce their marketing budgets while also dampening investor confidence. As a result, Zeta's revenue growth and market valuation as a growth stock may be adversely affected. The company must navigate these challenges carefully to sustain its financial performance and investor appeal. Conclusion. Zeta Global has demonstrated strong momentum with robust revenue growth, improving EPS trends, and expanding free cash flow generation in Q2 2025. Despite short-term stock price weakness, its solid fundamentals, healthy balance sheet, and promising AI-driven marketing solutions position the company for continued success. With analysts projecting significant revenue growth and a potential upside of over 40%, Zeta remains an attractive long-term investment opportunity for investors seeking exposure to a high-growth, data-driven technology leader. But remember, this is not a financial advice. What do you think about Zeta? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching, and see you in the next one.